Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right. We are back with another episode of the Real Estate Investing Club. Today we have Bradley Kirschbaum with us. Bradley is from Symphony Capital Group. He is a former Navy aviator turned investor with a pretty unique story. So I am excited to have him here. Bradley, thanks for hopping on.
Hey, Gabe. Good morning.
Absolutely. I told you before we got on here, we like stories. I know you got a good one. So why don't you take us back to the beginning? How did you get started in investing?
Well, I graduated from Marquette in 2012 and immediately joined the Navy and became a helicopter pilot. And at that time, I was just interested in all forms of investing. I kind of had this econ knack and was always paying attention to the stock market and just loved studying all things business. And for a while there, if it was a strategy for making money, I was interested in how people did it, right? So I tried a lot of different things, paid attention to a lot of different things, and learned a lot. And along the way, a couple of things just kept hitting me that made me realize real estate was really the path, and real estate was really how it was going to be done historically and into the future, both because of the consistency and a lot of other factors, including scalability. And one thing that really hit home is I was kind of reflecting a couple of years ago on just a horrible thing that took place during 2008, 2009. And that was the fact of the matter that General Motors was closed down in Janesville, Wisconsin, which is actually my hometown. And I thought about that event, and how it impacted people. And of course, about 3,000, 3,500 workers lost their jobs, which in and of itself is horrible. But simultaneously, a lot of folks who had nest eggs and maybe weren't even, related to the industry, a lot of white collar workers who were able to build up a $1 million nest egg, they watched that disintegrate in front of their eyes as well. So there are a lot of people right in my own hometown who are either out of W-2 income, or the equity that they thought was there wasn't actually there. And both those populations found themselves in the same problem, right? They didn't have the money that they expected to have next month for feeding their family or next month to retire. And I know plenty of people that had to work for another 3, 5, 10 years to make up for those damages. But point being, when I compared that kind of economic chaos to real estate, you start to realize how those benefits of cash flow and the ability to build a passive income stream that you can access before retirement creates a safety net that a lot of people benefited from, or at least the savvy people benefited from. Guys who had set up, $2,000 of passive income or $10,000 of passive income, whether it was supplementing your mortgage or supplementing your entire lifestyle, they didn't have to worry nearly as much about what had just happened, right? And it really hit me that style of investment with a high dividend and, of course, high appreciation in the end was something that was going to be extremely attractive if I was going to make it through the many different economic disasters that could happen, including what we're starting to see today, right? People are starting to get nervous today with inflation and rates and things becoming just more expensive. And the fact of the matter is we're in a storm and everyone's kind of putting their heads down. We're seeing this with most of our investors. A lot of people don't know what to do. They're worried about what's happening. And they're kind of in their boat in the storm, not looking around. But the fact of the matter is real estate is like a cave on the shoreline. And all you really need to do is take a little bit of knowledge and a little bit of effort to see that cave will help you weather out the storm, paddle over to it, get into it, and you'll ride it out. It's no problem. It's as if it's been really interesting to watch this year go down, because it's as if everyone has forgot that very important tenet of real estate, which is that inflation floats your gross. And it is actually going to help in a lot of ways buoy your investment as you get to the end of your 5-year or 10-year hold, whatever the fact of the matter is. So I think now is a great time to look back on things that have happened in the past, like that crash in 2008, 2009, like other inflationary times like the 80s, and consider that real estate isn't something that you should start thinking twice about, because who knows what's going to happen, but realize this is a great time to own more of it rather than sit around in cash while you figure things out. So that's the long-winded story of some things I observed and how I got started, but it connects to today. So I wanted to tie that together a bit.
Yep.
But suffice it to say, while I'm in the Navy, I realized real estate's the way to go. And I very quickly figure out that multifamily, commercial real estate in particular, is really what I wanted to be pursuing in comparison to, let's say, single family, right? Because the important concept of the overall value of a property being determined by the income of a property and not just what your neighbor was willing to pay for it is
forced appreciation.
Just crucial when you look at building out a portfolio. It actually freaks me out a little bit when people have 50 single family homes. Like, it's a great strategy in terms of being able to build a portfolio and cash flow. And what is nice about single family is if you're savvy and you've got a system set up, you can usually find a lot of things at a discount. You can get smart about your area and really start to dominate. But that is still a high intensity, high effort business model. And when you look at how you keep yourself safe in that situation, it usually involves ensuring your leverage is low enough, maybe sticking between 50 and 65%. And you start to need to continue to diversify so that a few properties over here can take care of your property over on Main Street if you ever lose that tenant, right? So it really starts pushing into the bedrock of why we like multifamily, because you're buying 200 tenants at a time, because you have multiple units at a time that can support the 2 or 3 units that are an issue, et cetera. But that's something I can break down indefinitely and talk your ear off about. But right around 2017, I really pivoted hard, knew I wanted to pursue this business model. And around 2019, found my partners. And ever since then, we've just been crushing it. We're buying 100 to 350 unit complexes right now in the Dallas-Fort Worth area. We're going to be doing that for the next year and a half or so. And we have bought in Austin, Houston, and Kansas City.
Nice. I love it. And I know you guys, there was a lot to dive into there, but I know that you started, it sounds like 2017, you started and you were actively deployed, correct?
Yeah. So I ended up, we got our wheels turning almost 4 years ago, 3.5 years ago. And last year was actually my last year in the Navy. And so we had momentum. We had already bought some properties, and I went on a 9-month deployment, which my partners were courteous enough to extend me a sabbatical, if you will. And funny enough, we bought hundreds of units while I was gone. So that resulted in me being basically over in the South China Sea or in the Western Pacific and making phone calls at 3 a.m, getting on podcasts like this at 2 a.m. And whether it was connecting with co-general partners or connecting with limited partners or filling out paperwork that I had to sign on the dotted line, it was a crash course in getting business done from the other side of the world. And it was pretty interesting, but we did, the team held it together. I wasn't a broken crutch that they had to rely on. So luckily we were able to still get quite a bit done last year.
I love it, man. That is the epitome of just do what you need to get done. Just don't let any obstacle stand in your way, regardless of where you are. It doesn't matter if you're in the middle of the Pacific Ocean, you can still get things done.
Yeah. I mean, there are people in more challenging situations that make, they make large companies run, they manage large portfolios, and they constantly do it internationally. It is difficult. There are challenges, but there are ways to get it done. And like you said, you just have to do whatever it takes and figure it out. So it was a crash course in doing what it takes.
Yep. Yeah. And it sounds like, your impetus to get into real estate, it really did come from a pretty personal experience for you. 2008, your hometown, GM. Did GM close the plant in your hometown is what you're saying?
Yep. Exactly. Right in the middle of my town that I grew up in. It's been demolished.
Yep. And that kind of brought you to real estate. You said one line, you said inflation floats your gross. Go a little bit deeper into that, because I've never heard that phrase. I think I know where you're going, but I want to hear a little bit more.
Yeah, to be honest, I don't think I read that phrase anywhere, so I might trademark that.
TM.
But there is. Right now, I received this morning, literally, it's 9 a.m. and an hour ago, I received a text message from someone who's thinking about investing. He had 3 big questions, and one of them included, inflation's going up, all these expenses are going up. How are you going to control your expenses? And of course, some of our expenses are already underwritten for, and there's a margin on that, and they're more controllable than other things. Other expenses like the renovation, a lot of people are, planning on renovating a unit for 12 grand, and it's actually costing them 20, which is why on this particular deal, we were interested in a property that didn't need full renovation. We wanted a property that needed maybe half the units, or in this case, a quarter of the units to actually be renovated, because it gives us advantages with the debt and allows us to do some value add, but maintain a very stable property. But when you keep looking at all the other expenses that will more than likely go up to some degree because they're coming from consumable, whether it's energy or whether it's maintenance and renovation, the gross itself is coming from any income that we can leverage from tenants, right? And seeing as we are, no kidding, the nicest comp in a 5-mile area, rent going up anywhere else around us pushes our rent up. And having a continuous stream of tenants coming into DFW, coming into Allen, Texas, is really what allows you to push the rent up. Rent is not a function of expense. Rent is not a function of interest rates. Rent is not a function of your renovation plan. Rent is a function of having a continuous stream of demand. That is it. Right now in Kansas City, we've got 2 properties, both about 100 units apiece. The rent is going up there because last week alone, we had 50 people apply to be a tenant at one of those properties. We are asking for the highest rent rate possible. So yes, expenses undoubtedly going to go up, and you need to pack in a margin for that. And when you look at bigger expenses like your interest rate, that of course has people freaked out. First of all, your interest rates right now, they might be at 6%. They might be at 7%.
I've actually heard they should be going to 8%.
Yeah, we're about to take another jump. It's going to happen. And we're buying into that. We know that because inflation is higher than that interest rate.
Yeah. Not actually, the report just came out, wasn't it? It was 9.1% for
9.1 year over year.
Yeah. Which is just absurd. That means that's like a hard money loan. If you have your money in a bank, you're essentially paying a hard money loan on that money, because inflation is just killing you.
Yeah. I mean, why does that happen? They're trying as best as they can to keep expenses from going up, right? So what does that mean? All my expenses are going on to tenants. I mean, it just is. I'm not interested, and this is critical, I'm not interested in buying in a 50,000 town population where there's no one else coming into town, right?
MSA
That's a stagnant market where your rent might go up a little bit to cover all your costs, but you're definitely not getting a bigger premium. You're definitely not increasing your delta. In DFW, it went from 1.2 to 1.3 million people from July of 2020 until July of 2021. 100,000 people in a year moved in. Yeah. In Austin.
Yeah, I was going to say pretty much every major metro in Texas has a double-digit, net migration since the last census. Texas is just exploding. It's crazy. We have 2 self-storage facilities in DFW, and that metro is just it's just crazy. It just keeps going up.
Yeah, absolutely.
Awesome. So, I mean, I know you guys do larger deals, 100 to 350, which is great to see. I'm always interested to see how people structure their deals. I know you said co-GP, which means you guys go in with other partners, maybe capital partners. So how is the typical structure when you're looking at your acquisition? How do you guys approach it?
So there's 2 things to that when you're talking about co-GP. Like right now, we're the lead sponsor over in Allen, Texas on 200 units. And we are working with 2 other entities to get the entire deal done, both with capital raise and boots on the ground. And of course, as we go along and we progress, there's less and less of this. So I would actually expect on our next deal, we probably won't have any co-GPs, perhaps one. But of course, there are benefits both for us and for investors to just have more sovereignty, right? less cooks in the kitchen, more control over the deal, more direct information. You really, both as a team and as an investor, it's just a lot cleaner and a lot simpler to deal with one person, right? In terms of information, who actually has control here, who's affecting the value of my asset. And while there are a lot of teams coming together, and we have definitely networked with other teams to make a good deal happen, it's just better for everyone involved to clean up the decision making and keep the control in one area, especially so that investors are familiar, as you have repeat investors, really, so that they're familiar with who's doing what and what to expect from the next deal. And then going to the structure itself, we run a 7 prep with a 70-30 split above 7. And usually at 15 or higher percent, we then go to 50-50. That's what we've done most often. We have adjusted that a bit in the past to the investor's benefit, but that's usually our go-to structure.
Yep. That makes sense. Awesome. And so you guys, how many different metros are you in? It sounds like DFW is your main focus right now, but are you guys spread for
technically 4? Technically we're in 4, but if it's not DFW right now, we don't even. I'll tell the broker, hey, sorry, we're not looking in this area. And if it is DFW and it's not in the buy box, again, hey, here's our PDF. This is the buy box. This is why you're out of it. Thank you. We're putting all our effort into acquiring over 1,000 units in DFW, both for efficiency and for momentum. There's a lot that comes from doing repeat business, and it benefits everyone in the long run.
Yep. And that actually leads me to my next question. And I think it sounds like you guys are trying to do this on the operations side. Are you having all of your properties in one location really increases efficiencies? So are you guys do you do third-party management, or are you guys bringing all the management in-house?
Third-party management, even at 1,000 units, we'll stick to third-party. Get me up to 10,000 units, and I might consider having a sister company. Yeah, but for now, we like a lot of the benefits of working with a third party, and it is tough to say that you can make things more efficient or more effective when you have a few hundred or maybe even a few thousand units compared to a national team that's managing tens of thousands of units. Yep. A lot of the efficiencies we gain are in the renovation and the prep, right? So in Kansas City, we bought 2 properties. Our renovation team went from property number 1 seamlessly over to property number 2 with a whole lot of washers and dryers stocked up, with a whole lot of drywall stocked up. And we were able to avoid the increase of costs that property number 2 would have suffered 6 months later when they actually got started on it, right? So that's the kind of efficiency you get. When you look at the self-storage guys, when you look at anyone with a portfolio around town, there's always a place to get creative and store extra materials. There's always a way to perhaps even work with tenants and say, hey, this property isn't working out for you anymore. I've got another property that might fit you because of your financial needs, or because this is a C class, this is a B plus now, et cetera. And it just really does pay to have more business in the area eventually.
Yep. No, I 100% agree. We kind of go after the property and not the metro, but I'm more aiming my sights toward focusing on specific metros exactly because of what you just said. I mean, if we're talking about even on the tenant side, somebody will come, they rent a unit from us in, property A, but then they're moving across town. We're like, hey, we got a storage facility on that side as well, where you can switch over, get the same type of unit over in that location. No problem, no harm, no foul. So it does really, there's a lot of different benefits from being focused in one metro and having all of your resources located there, provided that the metro is a good metro. If you're in a bad metro, then you're screwed. If you're in, Michigan during 2008, then that's a rough time.
Yeah, geez, I can't even imagine.
Yep. All right. Well, hey, I just took a peek at the clock. We did run through our time, so it is time to jump into the quick question round. Are you ready?
Let's do it.
Let's do it. It starts with books or any form of education. So give me 2 recommendations, one for general life wisdom, one for real estate specific.
General wisdom. I've been going down the list of very Gary Vaynerchuk books right now. He has a ton of insight into marketing and just how to run proper business practices. Gary's been around for a few years now. I think everyone knows his name at this point, but his books are really very detailed and pretty phenomenal. So I'm on my third Gary V book right now. I think it's
Nice.
Jab,
give a title out. One, your favorite Gary V book. Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Jab, 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 right hook.
Nice. That's been a very Gary title.
Yeah. And then on the real estate side of things, I would say Sam Zell. I can't remember the title of his big one, but Sam Zell has a book that really just goes over the history of his career and he breaks down a lot of his deals. I thought that had
Am I Being Too Subtle, right? That's the one.
Say again.
Am I Being Too Subtle?
Yeah, there we go.
Yep.
I knew it was something like, kind of catchy and loud like that.
Yeah. Yeah. Sam Zell, definitely a good resource there. I've never read one of his books, but I have, I've been meaning to, because that guy, he owns the biggest mobile home park portfolio, doesn't he? I think.
Yeah. He got in before it was cool.
Yeah. That's crazy. All right, moving on. Next question. This is for your younger self. So if you could go back to the Bradley who had, let's say, just got certified as a helicopter pilot. He had no real estate portfolio. He was looking towards his naval career. Go back to him, look him in the eye, give him one piece of advice moving forward.
Real specifically, I should have bought a property the day I got out to San Diego. I knew it.
Everybody listening, if you haven't jumped into real estate yet, I swear to God, 90% of all the investors on this show say that exact same thing. They wish they got started earlier. So if it's you, get out there, buy something, just get your feet wet. All right, Bradley, sorry for jumping in there. I had to put that. Keep going.
No, you're good. The military guys have a huge benefit with the VA loans. You can get to 0% down. It's absurd. If you can get 0% down,
0%.
You should probably just do it.
Yeah, for sure. All right. And that moves us to habits. Habits form the foundation of our life. So if you could point to one thing you do day in and day out, you feel contribute the most to your overall health, well-being, and happiness, what would that be?
Well, since I've left the military, I have a lot more control over my schedule, and that has resulted in consistently waking up early in the morning. And I used to be the guy that heard, look, the internet is full of bad advice, but there's a lot of good advice out there. And a lot of the good advice, you'll hear it again and again and again. And until you actually execute on it, you won't see the benefits. And when I started waking up consistently early before 6:30, I started seeing the benefits. I wake up already feeling successful. I get things done before people keep calling and emailing me. It forces me to go to bed at 10:30 and wake up feeling better. And it is the way to go. Start waking up early and you'll start seeing more success in your life. I promise.
Yep. I'm a big fan of waking up early myself. And the next question is about tools. Software tools specifically are, they run all of our businesses. So give us one tool recommendation that is crucial to the operations of your business.
This is pretty cool. It's called Prop Data. All it really does is compile the information for an operator across all your properties. So you can see your NOI, you can see your expenses, you can see your occupancy, and it compiles it out of wherever you have your PDFs or Excel sheets stored and puts it into a graph format for you. So I can open up Prop Data real quickly, look at all our properties, see how they're trending, see where they are in real time. So if I'm on a call or I'm talking to my partners, we have all that information right in front of us and it's updated automatically. And it doesn't matter if it's all with the same property manager. It doesn't matter if it's stored in different places. It's pretty unique.
Nice. So it's like a portfolio generator, regardless of the platform that you're using for your property management, or, even if it's in Excel or whatever, they'll bring it all together into one form.
Yep. So long as you send it the sources, from then on, you have a constantly updated real-time data management on all your properties. And it makes knowing what's going on even more simple than your weekly and monthly phone calls.
Very, very cool. That is the first recommendation for that one. So good recommendation. And that leads us to the next question. I lost my spot. I do this every single time. There we go. The United States, it's a big place, a lot of opportunity out there to invest. So what is the metro that you are most excited investing in today?
Look, I'm going to double down on it. If I didn't, I'd be a fool to say we're looking at Dallas Fort Worth for the next 12 to 18 months and buying 1,000 units. It's like, you really, really, really have to look at what's going on in Texas, and you need to look at what's going on in Austin, Houston, and DFW. The numbers are going to continue to go up, and the foot traffic is staying extremely strong. If you're not considering it, you're not looking at the strongest metrics in the United States right now, period.
DFW, love it. And that leads us to the very last question. This one is for the listeners. You've given us a lot of good advice, so I'm sure people want to reach out. What is the best way for them to get in contact with you?
See if I get this right. Right here, if you're watching, Bradley at symphonycapitalgroup.com. We are symphonycapitalgroup.com. And I'm on all, we are on all the social media outlets, Facebook, Instagram, etc. You can find me with Bradley Kirschbaum on any of that.
Perfect. Symphonycapitalgroup.com. I will put that in the show notes. So if y'all want to reach out to Bradley, just click the little more in the description. It'll pull down the description. In there, you can find all his URLs. So Bradley, that wraps it up. Thank you very much for having on the show.
Thanks, Gabe. Appreciate it.
Absolutely. And for everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. Other than that, I hope you guys have a great week. Fantastic. Keep rocking it. And I look forward to seeing you on the next episode. Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode and were able to pull some actionable advice that you can go home with and apply to your own investing business. Before you go, I have a gift for you. If you're a new investor looking to get started or an established investor looking to take your business to the next level, I've created an ebook just for you available on the website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find a deal that's actually a deal, how to finance that deal with little to no money down, and how to exit a deal for maximum value. And if you get the ebook today, I'm going to bury you in bonuses, 7 of them to be exact. First, you'll get the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating real wealth in real estate. Then you'll get the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools and systems and even the vendors we use to grow our business. After that, you will get the top 100 best performing keywords pack, which will give you the exact keywords we use to target leads online and generate leads without having to lift a finger. Next, you'll get the contracts bundle for wholesaling and renting real estate, which will give you access to all of the contracts we use in the field to execute all types of transactions. After that, you'll get the Investor's Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automatically from those calculations. Next up, we'll give you the Investor's Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And finally, you will get the Wholesaler's Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. I know that is a ton of things to say. I'm glad you were able to stick with it. So you'll get both the ebook and all of those 7 free bonuses when you download the ebook today. All we charge is the admin cost to run the show. So if you are interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. click on Get the ebook bundle at the top of the page and take advantage of that deal. With that housekeeping item covered, I hope you have an absolutely fantastic day and even better week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.